What is going on, XRP Army? Welcome back to the channel. Today we are breaking down a major update that just dropped from Ripple, and for the first time in years, the most important eyes in the room, US institutional investors, are watching this development like a hawk. While retail investors are distracted by the daily price candles, Ripple has quietly executed a strategic masterstroke that fundamentally changes the utility of the XRP ledger. The headline is simple: Ripple has partnered with LMAX Group to integrate the Ripple stablecoin, RLUSD, as a core collateral asset for institutional trading. If you don't know who LMAX is, you need to listen closely. They are one of the world's leading institutional exchanges, handling billions in FX and crypto volume for hedge funds and banks. This update means that Wall Street can now use the XRPL not just to move money, but to collateralize their multi-billion-dollar trading positions. In this deep dive, we are going to expose why this collateral shift is the missing link for US adoption, break down the new 21 shares XRP Outlook report that has just been released to sophisticated investors, and explain why the smart money is accumulating in the 190 range. Let's start with the LMAX bombshell. This isn't just another partnership announcement. LMAX Group has integrated RLUSD into its global trading infrastructure. This allows institutional clients to use RLUSD, which runs on the XRP ledger, as a cross-asset collateral. Think about what that means. A hedge fund in New York can now hold RLUSD on the ledger and use it to trade Bitcoin futures, FX swaps, or gold contracts. They don't need to sell their crypto to go back to fiat. They stay on chain. This locks massive amounts of liquidity into the XRP ecosystem. But here is the kicker. To manage this collateral, to move it between wallets, and to pay the ledger fees, they need XRP. This transforms XRP from a simple bridge currency into a financial lubricant for the derivatives market. US investors are watching this because collateral utility is a $1 trillion use case. It's what makes the financial system spin, and now the XRPL is part of that engine. We need to talk about the 21 shares institutional report. Just days ago, 21 shares, one of the largest crypto asset managers in the US and an issuer of an XRP ETF, released their XRP Outlook for 2026. This report is not for retail. It is written for the investment committees of pension funds and family offices. And the tone of the report? Surprisingly bullish. They have set a base price target of $245s, with an optimistic scenario pushing significantly higher if regulatory tailwinds continue. Why does a $2.45 target matter when we want $10? Because institutions are conservative. When a major firm like 21 shares puts a buy rating with a clear upside target, it gives the green light to risk managers. It validates the asset. We are seeing US investors react to this report by slowly increasing their allocation. This is the smart money floor being built right under our feet. Furthermore, let's look at the ETF inflow persistence. We are now months into the launch of the US spot XRP ETFs, Bitwise, Canary, Franklin, and the data shows something interesting. The inflows are not explosive like day one, but they are consistent. Every single day, net positive inflows. This is exactly what happened with gold ETFs in the early 2000s. It is a slow, relentless absorption of supply. With the LMAX news proving that XRP has utility beyond payments, these ETF managers have a new narrative to pitch to their clients. It's not just a remittance coin, it's collateral software. That narrative sells. We also have to address the regulatory moat in 2026. The 21 shares report specifically highlights that the legal clarity XRP enjoys in the US is its biggest competitive advantage against other altcoins like Solana or Cardano. US investors are terrified of litigation risk. They saw what happened in 2022 to 2023. They want assets that are battle tested. XRP is the only asset that has gone 12 rounds with the SEC and won. This moat is why, despite the hype elsewhere, the big US money keeps circling back to Ripple. Finally, look at the volume profile. We are seeing a shift. The high-frequency trading volume on the XRPL has spiked since the LMAX announcement. This isn't retail buying and selling. This is automated market making and collateral rebalancing. This type of volume is sticky. It doesn't disappear when the price drops. It creates a baseline level of demand that supports the price structure. The US investors watching closely are looking for exactly this type of structural demand before they deploy size. Now, let's pivot to the macro narrative driving this US interest. interest, the tokenization of real-world assets, RWA. The major update isn't just LMAX, it's the broader integration of the XRPL into the RWA stack. We recently saw DXC Technology, which manages core banking for $5 trillion in deposits, announced that they are using Ripple's custody and RLUSD for their banking clients. This connects the dots. LMAX provides the trading venue and DXC provides the banking access. The XRP ledger is the highway connecting them. This is what US investors are seeing. They see a complete ecosystem forming where a bank can issue a tokenized bond via DXC and a hedge fund can trade it via LMAX, all settling on the XRPL. This is the holy grail of finance. Let's discuss the Standard Chartered prediction in this context. Standard Chartered has reiterated their 8-point target for XRP by the end of 2026. Their thesis is heavily reliant on this exact RWA narrative. They argue that as RWA tokenization moves from pilot to production, the chains that offer the best mix of speed, low fees, and compliance will win. XRP is currently the leader in that specific mix. Bitcoin is too slow, Ethereum is too expensive, Solana has outage risks. XRP is the Goldilocks chain for institutional RWA. US investors respect Standard Chartered. When they see the LMAX and DXC updates, they see the roadmap to $8 becoming reality. We also need to talk about Ripple custody expansion. Ripple recently acquired Standard Custody and Mataco, and now they are integrating these services directly into US banking platforms. Why is custody so important? Because US banks cannot hold crypto without a qualified custodian. By owning the custody layer, Ripple owns the keys to the kingdom. They are making it plug and play for a bank like Wells Fargo or Citi to switch on XRP services. The major update is that these custody solutions are now live and operational in the US market. This removes the final technical barrier to entry. Furthermore, let's look at the DeFi renaissance on XRPL. With the EVM sidechain now gaining traction, we are seeing the first institutional DeFi pools emerging. These are permissioned pools where only KYC'd institutions can trade. This sounds boring to crypto anarchists, but to a US investor, it is music to their ears. It means they can earn yield on their assets without worrying about interacting with sanctioned wallets or money launderers. Ripple is building a walled garden of DeFi specifically for Wall Street, and the gate fee to enter that garden, you guessed it, XRP. Let's address the price action versus news divergence. You might be asking, if the news is so good, why is XRP stuck at 190? This is the most common question I get. The answer is accumulation. In financial markets, price is the last thing to move. The smart money accumulates during the period of good news, flat price. They use the boredom to fill their bags. They rely on retail investors getting frustrated and selling. If you sell now, you are literally handing your XRP to the institutions that are building this infrastructure. The breakout happens when the accumulation phase is complete. The LMAX update suggests we are nearing the end of that phase. Finally, we have to touch on the stablecoin wars. RLUSD is competing with USDT and USDC, but RLUSD has a distinct advantage. It is backed by Ripple's balance sheet and regulatory compliance. US regulators are cracking down on offshore stablecoins. This creates a flight to quality. As institutions are forced to move away from Tether, RLUSD is the logical destination. And since RLUSD lives natively on the XRPL, that capital migration benefits the XRP ecosystem directly. So, US investors are watching closely. What are they waiting for? They are waiting for the confirmation signal, and this will likely be the first public announcement of a major US bank using the new DXC Ripple integration for live volume. When that press release hits, the window of opportunity closes. The price will gap up. The LMAX integration is the precursor. It is the plumbing being tested before the water is turned on full blast. What is your strategy? The data from 21 shares and the LMAX update points to a clear path. The strategy is strategic accumulation. If you believe in the 2.45 base case, which is a 25% upside from here, and the 8.00 bull case, which is a 300% upside, the risk-reward ratio is incredible. My strategy is to use these consolidation periods to dollar cost average, DCA. I am not trying to time the exact bottom. I am trying to build a position that matters when we hit $5. A critical warning on market noise. As US interest grows, so does the FUD. You will see articles from competitors trying to downplay the LMAX news. You will see analysts predicting a crash to 0.50. Look at who is funding those articles. Look at the incentives. The on-chain data shows wallets with 10M plus XRP are buying. That is the only signal that matters. Follow the money, not the headlines. Also, be careful of fake investment groups. Scammers will claim to be Ripple Institutional Sales offering discounted XRP. This does not exist. Ripple sells to institutions via ODL, not via Telegram groups. Stay safe. Let's talk about the long-term vision. 2026 is the year of convergence. We are seeing the convergence of traditional finance, TradFi, and decentralized finance, DeFi. XRP is the bridge. US investors are watching because they know the current system is broken. Settlement takes too long. Fees are too high. XRP fixes this. It is a technology bet, not a currency bet. You are betting that the world will choose the faster, cheaper, better technology. History shows that technology always wins. The bottom line is this. Ripple just dropped a major update with LMAX and confirmed it with the 21 shares report. The US institutional machinery is turning its gears toward XRP. The price is currently lagging the fundamentals, which is the definition of an investment opportunity. The eyes of Wall Street are on us. Don't blink. Thank you so much for watching this deep dive. If this analysis helped you understand the significance of the LMAX and 21 shares news, please destroy that like button. It helps us wake up the retail investors before it's too late. Subscribe and turn on notifications because the news cycle is accelerating and you need to be informed. Stay strong, stay safe, and I will see you on the moon. Peace.